Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education using the TC2000 and TradingView platforms. Hello, welcome to the Futures Week in Review, and I want to go ahead and start off with the dollar. And as we had last week, everything was maxed out 100.00. Now it has fallen out of tolerance as far as overall probabilities for the foreign currencies to the upside. They are, however, crowded short, but there is no significant marker for price action to move to the upside. It was maxed pretty much last week and this week. Last week formed a doji. This week dollar went down significantly as expected, and price of the basket of currencies, or 10 foreign currencies, went up. So we have no real advantage right now with respect to the COD index and the dollar. So the dollar could go up or down next week. But right now, currently, these are weekly candles. Momentum is to the downside for the dollar. Now looking at overall futures markets for last week, start off with the COD indice, the British pound. Nice overall gain on a Sunday muddy fade of $350. Next overall one is the euro. Nice overall gain of $387. Now going to the Swiss franc, I start off with the Z3 trades. One of the things that I noticed here was, even though this was a gainer, this was below the dragon. I did this as a Z3 trade, did not take it, so I did not get that overall gain. Next one was the S&P 500. This was above the dragon and green at this point, and I did not take it as overall short. And as you can see here, the next day is when it went ahead and went short. And plus, the overall ask was above the high on the overall future, so I did not take this. It didn't fall into my criteria. If it was down here, an overall price, then I may have would have taken it, or if it was below the dragon, but I didn't take the S&P 500. Same thing for copper. Everything has been up above the dragon in green, and so looking at this, I did not take it. It was too strong to the upside, and as you can see, it hasn't even weakened at all. It still has more momentum to the upside, so I just kept that as a Z3 trade, or Z3 short trade, and just follow along the overall Z3. Next was sugar. Sugar was long, but it was also below the dragon and red background, so I did not take this. This was an overall Z3 long, though it was a $929 gain, a nice gainer at this point, but I didn't take it because of the overall positioning and overall weakening of this particular commodity. Silver, same thing, overall green to the upside, and the background, though it was below the dragon, is still green and strong. I did not take it. It went down initially and then came right back up, but since the overall background was green, I did not take it as well. Next one was consumer staples. Did not take this one. It was overall green background, and same with XAV. Or also have lost the COD index overall calculation due to pretty much the low volume of trades within the healthcare. It's still set to 100, 100.00. It has been for a very long time, all the way up through here, but it hasn't calculated here, so I did not trade this one either. So I had only 2 overall trades, and that was $737. If I would have taken all of the trades regardless of positioning and price action, with the strength of the markets, would have been a $1,700 loss. Trying to scrutinize these fades a little bit more, especially with the introduction of the Z3 trade, allows me to get better probabilities going forward and better wins. So looking at next week, we have Mexican peso, Bitcoin, cocoa, emerging markets, S&P, gold, copper, coffee, NASDAQ, OJ, gas, silver, energy, consumer staples, Dow, and rice. Is your overall strong selling positioning. Strong buying positioning, we have Aussie dollar, British pound, Canadian dollar, now the Japanese yen, Zealand dollar, Swiss, feeder cattle, hard red wheat, palladium, 10-year, ultra, corn, soybeans, wheat. Strong buying positioning. For weak selling position, we have the Brazilian real, oil, heating oil, emerging markets, platinum, soybean meal. And we have a couple of weak buy positionings as far as the VIX and the 10-year. I'm starting to see some crowded shorts, or more crowded shorts, in the bonds. We'll see how that goes over the week. Well, that's all I have for the Futures Week in Review. If you're interested in these kind of strategies going forward, programming in both PineScript or Python, auto trading, and joining the Crowded Market Report Commitment to Traders community, as far as understanding the commitment to traders, click on the links below. And remember, ruthless risk management. Have a great weekend, everybody, and I'll see you on Sunday.
Well, if you like this video, hit the like rumble button below and the subscribe button. And if you want more information, click the course information links below. On the TradingView link and on TC2000, I have an affiliate link. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.